How's it going, everybody? Appreciate you tuning into the OIG podcast. Kevin Orsinger, Max Messett, myself. This will be episode number one of the OIG podcast, and this is going to be our quarterly market update. With this, there will be some exciting videos that come out in the future, but like I said, this will be our first episode with the podcast itself. Kind of with this, our anticipation and our belief with this is just on the investor side, the power of having that education and knowledge around the market. The goal behind this is to hit some general market updates, break that down a little bit further into some sector market updates through how those have broken down over the year, or actually the quarter, over the quarter. Looking a little bit into last year, maybe how those trends have changed, and then with that, some investor ideas, as we'll call them, as we kind of close out today, of some things to keep top of mind on the investment side, on your retirement accounts, your individual accounts, some things that can look around like that. So again, just episode number one, we're super excited to start this for everybody. And again, give some good education, give some good knowledge to those investors that have the want to kind of dig into stuff a little bit more. We understand this isn't everybody's cup of tea, but for those of you that do have that little drive to it, let's go ahead and get into it. Kevin's going to kind of start us off with some broad market updates. If he has anything to add before that, he can get right into it. But Kevin, go ahead and dive us into this if you don't mind.
Very good. Thanks, Max. I'm excited. You and I have a passion for this, obviously, and hopefully we can extend that to some other investors. This will be, we'll call it an extension of our Monday market updates that we do each week. Just a little more detail. So good start to 2026. All the indexes were up through the first month. The NASDAQ kind of slowed down at the end of January. The rest of the index continued well until the back end of February. And then we had the conflict in the Middle East, geopolitical tensions began. February 28th was the start of that, and the market started to take a little bit of a downturn at that stage. At the peak, we had 1.5 to nearly 3% returns on the U.S. markets. The international market was up nearly 10%. So a really, really good start to 2026. March was a different story. So the markets took a downturn. Needless to say, NASDAQ was down about 7% year to date. Dow was down about 3.5%. S&P was down a little bit over 4.6%. And then the EFA was down nearly 2%. So two of those indexes, the NASDAQ and the EFA, both went into correction territory, which means off of its peak, it was down 10%. So that is a concern, at least in the short term, when you get drops, especially when it happens over a 30 or 40-day span. The concerns moving forward from this are the price of a barrel of oil has gone up 70 to 80% since the beginning of the year. Obviously, where the conflict is, the large oil producers, Iran is the third, I think, largest oil producer in the world, nearly 13% of the world's production. When you have that combined with the access to it through the Hormuz Strait, the price of the barrel went up drastically. We're starting to see that at the pumps now and expect that to continue. With that becomes an inflationary concern. As long as the price of the barrel is up and the price at the pump is up, inflation is going to go up as well. So those are the things we look at. Max's job and my job really with the markets are we're looking 6 to 12 months out to have an understanding of what the markets could look like. It's nice to know what they're doing today. It's important to know what they've done. But more importantly, where are things going to be? We'll call it 180 to 360 days from now. We were fortunate for the end of March, the last day of the quarter. All of the indexes were up, 2.5 to 3%. So in spite of the poor returns we had over the first 3 months of the year, we kind of got bailed out a little bit on the last day of the quarter, made those numbers a little bit more palatable, still not good, but a little bit better. And hopefully as we move here into April, May, and June, here for the second quarter, that things will improve. At this stage, the markets are tied to what happens in the Middle East. Does a ceasefire occur? Does some sort of agreement occur that this ends? As long as it continues, there will be stress on the markets. If you remember, I think it was 2022 when Russia, Ukraine began their conflict, for 45 to 60 days. At the beginning, the markets were really unbalanced. And we're kind of in the same situation with this. What happened in 2022 was the news cycle kind of moved off of reporting with Russia and Ukraine, and although things were still going on, the markets rebounded a little quicker because it wasn't directly involvement from the U.S., especially with troops. I'm not sure we get that this time, since we are the main proponent in this conflict. I think we're going to have a situation where, as long as we are still having reporting coming out of the White House, that things are happening or going to happen from an aggressive standpoint, that the markets are probably going to continue to be in a little bit of a volatile situation. So hopefully we get some resolution to that, or some more positive news coming out, because that will really benefit the markets moving forward. Something else that occurred during the first quarter was we had two Fed meetings. No interest rate cuts or interest rate increases during that time. And quite honestly, with Jerome Powell being out, I think it's May 15th, and with only one more meeting here before his term ends, not expecting any cuts to occur. The nominee, Kevin Warsh, is getting ready to go through his nomination process. Expectations are is that he will get through and he will be the next Fed chair. He is more hawkish than Jerome Powell, which means he's a real believer in lowering inflation at really any costs. So there is the possibility, if he gets in, that we maybe get some interest rate news that we don't love at the beginning. But ultimately, if that lowers inflation and gets the economy kind of rolling in the right direction, he's more concerned with the end result than maybe the path to get there. And then the third thing is, most people are probably aware, is 2026 is a midterm election year for Congress. Historically, the markets have a little bit of, we'll call it stress leading up to these elections. The markets hate uncertainty. They always have, always will. The midterm elections provide that. So it would not surprise me if we have a little bit of volatility, in the fall leading up to these elections. The good news, though, is historically the markets always, not always, don't want to say always in the investment world. The markets generally rebound from those losses in the 12 months following a midterm election. The markets usually do pretty well. So assuming everything is equal to what it's been in the past, there is expectation that will be our case here. But we're a long way away from those November elections. And a lot of other things going on that could benefit or potentially hurt the markets in the short term.
Gotcha. With that, Kevin, and I know you kind of talk a little bit about, volatility. Markets obviously aren't a fan of that. You got the conflict going on, a couple different things that are kind of pulling on each end of the string. What do you see going forward? What's the biggest? Is there a biggest driver? Is there something that could flip this year around? Is there, obviously not huge numbers, but what's kind of that holding edge that could really kind of change things around if you see it giving?
Yeah, I think that the only reason, or the main reason, that the markets were struggled was the geopolitical tensions in Iran. The NASDAQ started pulling back before this happened, just because that AI trade is a little bit overdone at this stage. And quite honestly, if we're fortunate enough in the near term to get some sort of resolution to the Iran situation, I think you see the markets rebound fairly quickly. The longer this lasts and the more that inflation kind of becomes embedded into our economy, I think it could take a little bit longer for the markets to rebound. But that would be the main thing. There really is only one thing negatively impacting the markets at this stage. And once that is gone, which again, hopefully is sooner rather than later, I would expect the markets to have a pretty quick rebound to get us back into positive territory and working to some positive gains.
Awesome. I'll kind of piggyback off of that. I'm going to go ahead and get into some sector side of things. But I am going to piggyback off of kind of what you said with this all kind of goes hand in hand, right? When we look at sectors of the market, I do want to just preface anybody that may be on this, checking this out. The sector in a market is a general selection of a company's main doing. So when we're looking at, an energy sector, those are your companies that are in the oil and gas industry. We're looking at a basic material sector. Those are your chemicals and your metals, a lot of that infrastructure, our financials, your banks, your investment companies, your insurance companies. Those are the sector, and all those companies make up a section of the market. Now, the funny thing that comes along with this, and kind of has Kevin has touched on, is even though the markets have struggled, not every sector is going to struggle. So when you look at the market as a general whole, you have each of these kind of slices of the pie. And when you pull them all together, who did well, who did bad, and what's that average out to be across the board? So I'll kind of get into our top leading sector of the first quarter here was the energy sector. And that's your oil, your gas, your renewable energy, everything that falls into that category is what makes up this sector. And again, it was up 35+% as we're coming to the end of March there. With that, and again, it all rolls with kind of what Kevin touched on. A lot of that geopolitical tension is what's pushing up the price of this oil. That supply and demand conversation comes in as well. And you're looking at that of oil can't get through, the Hormuz Strait. And that plays a huge part across not only where we're at, but across the nation of how does oil get transported out of there? And that's one of the main parts. So when that gets shut down, our supply and demand conversation really comes into play. That supply dwindles, that demand pushes up, and that's really what's grabbing the oil prices and just really bringing them up. Inflation does come into that conversation as well. Also part of that comes the trade side of it for investors like ourselves of where does that play into the portfolio? A lot of that inflationary push on some of these companies could be people trying to get on that roller coaster to ride the high rise up, going up. They see that supply and demand conversation, these conflicts, and how that oil price is getting affected, and how can they get a piece of the pie and get into there, and kind of that price of oil also gets inflated on the stock side, on the sector side, really pushing that sector up. The next sector that did well this quarter is also that basic materials sector, and it kind of piggybacks as well off of those conflicts and off of a lot of what's going on. So that's kind of your chemicals, your materials, breaking it down to your special materials, your mining industry, stuff of that nature. A big part of this comes into play. It being up over 10% is the new AI data infrastructure boom. I know Kevin kind of threw some AI stuff in there as well. Kind of two-edged sword there, falling off of what AI started as, and then also the new bump up, Kevin, as you would call it, kind of the bump up of AI of if this is going to be part of reality anymore, we're going to have to get places for it to be on the grid. I know the grid's a big talk of how does this play into it with, getting energy through all this stuff. But on the basic material sector side, it's building these infrastructures and having these metals, having these chemicals. EV cars, Teslas, your electric cars play a huge portion of this. It's groundbreaking stuff that people are getting into, and it's a big demand right now that a lot of these metals have to be used for to build these things. And again, when you're thinking of base materials, that infrastructure conversation needs to come in because these AI data centers are not just a mom and pop shop that are a two-story, one-room building. It is a big building with a lot of energy being pushed through it. So to build these things comes with a lot of necessity materials to get them going. With that, still the tariff conversation comes into play. Some of these making it more of a domestic price match premium. So, obviously on that side of things, that's just helping our United States companies of getting those profits, those revenues generated to help them out on that side. And then kind of also both of these, the basic material and the energy that I do want to hit on, kind of like Kevin said, they're very sensitive to the economic turns. So it doesn't take a lot necessarily for some of these to start to trend one way or the other. Conflicts start to get resolved over in the Middle East. Those oil prices change. As me and Kevin have joked a lot in the past, not necessarily that the pumps are going to change right off the bat. We're not going to go to the gas station and say, man, look what it is, 50 cents a gallon. Back like when I've never seen it personally, but I've heard about it. It's one of those hoax things that you think is not even real. but not something that just jumps out and changes automatically, but could start to trend that way as things kind of get resolved. The basic material side, building's going to continue. They're going to keep getting these AI centers put up, electric cars. All the infrastructure side is still going as these kind of AI booms are happening. So I expect those to kind of continually, as long as the building's happening and those materials are being used and they're getting premium sale on those for revenue sides, these companies are going to continue to do well. The lagging sector of this quarter is going to be the financials, like Kevin touched on a lot with rate cut uncertainty. I know in 2025, we kind of had those scheduled rate cuts. Financials did well just on that, not volatility. It was more of a schedule, knew what was coming, could see in the future. But without rate cuts, things are volatile. The uncertainty of what's going to happen is what they don't always like. And that's kind of where we're at with that. A lot of what was going well in 25 didn't come to a halt, but has slowed down on the cut side, and just on the bank side for profits, for those splits of generating revenue and how they can do it. Interest rates play a huge part of that. In a state where we hear about some future cuts coming, there is cuts that happen. I think as the Feds continue to meet and like Kevin said, could maybe go the opposite way right off the bat once new heads get in there. But at some stage, once they start to stabilize those out, I think it will start to help the financial side. But in the short term, I think things are kind of going to stay where they're at as we roll into Q2 here, and just kind of keep doing their thing on the energy and the base material side. I think they're very, very on the edge of a lot of this conflict and a lot of these overseas happenings right now of what could kind of take a toll as we head into the future.
You expecting as we move into the second and third quarter of the year, that the leaders and laggers continue to be the same parties, or do you think someone else may be able to move in?
I think short term, I think we're going to continue to see this. I think like we talked about, those conflicts are really what the market's edged on right now. And that's kind of, at least for the leaders, that's kind of what they're sitting on as well. I think you could see some technology come back into the game at some stage with the AI. I know, a lot of the people are using AI. It's what it is. It's part of the present now. So as that can get monetized and as that can kind of be seen as a real weapon and a real tool to people, I think you might be able to see as money starts to flow through that could kind of turn. But in the next couple quarters, I think we see this same happen with rate cuts, kind of how they're going, and also the conflicts, unless a big change happens. But as of right now, I think things continue to trend how they're going, and we'll see what the market can hand out here coming up.
Right.
So we'll kind of dive in, and Kevin's kind of going to spear this one with some investor reminders and investor ideas and investor reminders. Kevin, I know you kind of want to start that one off for us of some time of year things and what can investors be watching for?
Yeah. So as we're starting April, tax day is April 15th.
Yeah.
Make sure you get your federal taxes filed on time. If you have not filed your taxes yet, maybe talk with your tax professional about making a Roth IRA contribution or traditional IRA contribution for the 2025 tax year. You have up until either April 15th or the time you file your taxes to make that contribution. So we're as we're speaking now, we're in the final week of being able to do that, but smart to take advantage of that opportunity to get a contribution coded to the previous tax year. And that allows you then for 2026 to still have those contributions available to you moving forward.
Yeah, that's awesome. And that's
anything from you, Max?
Yeah, I think like you said, we hit on that a lot. Is just some not last minute, but I guess we are kind of last minute here as we're rolling into the last week of any way that you can kind of get those last minute monies put away to help you as you roll in the future. And it's a great way to allow yourself still those 2026 opportunities instead of using 2026 contributions when you still have some 2025 contributions left over, to make sure you fulfill those first. If you haven't filed your taxes, want to make sure that we're being clear on that if you have already filed your taxes, I'm going to have to roll with 2026. But if you have not, that you can still take advantage of that opportunity because it can be a great one. So
What's the future of the OIG podcast looking like for us,
Yeah,
Max?
yeah. So we got some exciting stuff coming out. We're going to use this as our quarterly market updates, and as well, we're going to do some educational. Kevin does his weekly market updates on Mondays. I have my 2 Minute Tuesdays that go out, and I hope you guys see those across our socials. With this, our goal is to really go a little more in depth for those and to give some ideas, give some more education, and just cover those topics a little more in depth and, like I said, with some more detail to it. So, kind of the future of this, I think we're going to start off with some episode two. Around that area will be our life stages conversation, and we'll start from age 25 to 39, I believe,
Perfect.
somewhere around that,
Perfect. Yep.
around those life stages. So, guys, keep an eye out for that because it will be a fun one. It's again a great way to go a little more in depth, gives us a little more time to talk, a little more time to give some more detail, and hopefully you guys enjoy those. I hope you guys have enjoyed this. Kevin, anything else as we kind of close out here with?
No, for viewers that might be closer to my age, we'll do life stages that's 40 to
Yeah,
55, and a
yeah, I
life
guess.
stage
Yep,
that's 55 to 64,
yep,
which would be
yep,
my range, and then there's a
yep,
life stage for 65 plus. So we'll
yep,
we'll touch on all four of them in the coming weeks and months.
yep.
Um, but quite honestly, yeah, the 20 to 39, if it doesn't fit for you, it probably fits for someone that you know.
Yeah, absolutely. Absolutely. So yeah, guys, like I said, we always ask that you share us, like us, subscribe to us. Anything, this will be on YouTube. We're putting it around, and I hope as many people that can jump on it and enjoy it that they do. Like I said, always follow us on Instagram, Facebook. We have a YouTube, LinkedIn. Both Kevin and I have some LinkedIn that we put our stuff on. So any way that you can get a hold of our stuff, we just ask that you keep track of it. And we really hope the end goal of this is that you guys just enjoy what we're putting out. And it's a great tool for you guys to put in your backpack for whenever you need it down the road, and some ideas for you as we head forward. But as always, we appreciate you guys taking the time to watch and give us a shout if you need us. So, Kevin,
And we'll
anything
and
else
we'll
as we're?
put we'll put a link to all of our socials
Yep,
in the comments right
yep,
below,
yep.
so you have access to that to be able to connect with us, so you don't miss anything.
Absolutely,
Very
absolutely.
good,
But guys,
Max.
appreciate
Thank you,
you
buddy.
tuning in.
Appreciate your time.
Absolutely, absolutely. Thanks, Kevin.
Yeah, we'll see you guys.
See you.